Hey, what's up, everyone? It's your boy, Dark Polago, and thanks for joining me on another weekend recap session. Today is Saturday, February 26, 2022, and what a crazy week in the stock market. Um, Ups and downs, and Russia invading the Ukraine definitely affected the market. We ended the week on the high note, but is it really a high note? Are we starting a new bullish trend, or are we just rallying to the mean for setting up for a longer-term downtrend? Wow. Um, this upcoming week is going to be super important. We've only got a couple weeks left to the March FOMC, where they're going to begin doing rate hikes, which can affect the market as well. So I feel like if we get into that position going into that week on a high note, expect some severe volatility. But we'll get into that tomorrow. So welcome if you're new to the channel. I am Dark Pool Algo. I am a smart money dark pool block trade algorithm software analyst. I'm not an algorithm, I'm an analyst. What I do is I look for opportunities in the market where there is divergence between price action and the flow index, which tracks large institutions, hedge funds, smart money, dark pools, block trades. We look for that divergence and we try to capitalize on it, right? We've been doing really well for the last couple of weeks. I think we've only missed one or two from our weekly watch list, which is pretty decent, right? We usually review 4 or 5 stocks every week for the newsletter that you can go ahead and sign up for at darkpoolcharts.com if you haven't already signed up. And while you're there, check out some of the stuff. We've got some great partnerships going on. You can get a free trial of FlowTrade while you're there. And yeah, that's it. So before I jump into this video, if you're new or if you're just coming back, do me a favor, go ahead and click that like button, subscribe, and turn on notifications. What that does is allows me to notify you anytime we put out a new video. We are starting to go through our growing season where we're going to be putting out a lot more videos. We're going to do some testimonial videos, some personal journey videos. I've got something towards the end of March that I'm super excited about. All right, I'll do a quick teaser. Going to be going on taking a 8-week immersive high-intensity trading psychology course to understand how to improve my mental edge, right? Yeah, sports psychologist, like, I'm on it. So I don't want to go too much into it. There's a whole process behind it, but I'm super excited about it. And yeah, this week we've got some good stocks this week. Stay tuned tomorrow for our weekly watch list that's going to be coming out. I'll be working on that today. And from what I've seen, we've got some good ones here to move. Okay, so real quick video intro. We'll be right back in a second. See you in a second. We had some great divergences going into this week. On the watch list, I'd given you both the upside and the downside. I believe in this market, there's definitely an opportunity to play things up and then catching it as it's coming down. That's how we've been. We've been up and down. So rather than just straight bullish, we're like, hey, let's catch the run up and catch the sell off. So with that being said, top 4 stocks for last week were Lululemon, Dick's Sporting Goods, Team, which is Slack, I believe, Atlassian Team, and then Match, MTCH, Match.com. And yeah, super great. Let's go ahead and get started off with Lululemon. So Lulu going into last week, right? What you have in front of you is the flow index, which is FlowTrade. It's the smart money dark pool, that block trade algorithm software. They've created their own flow index that tracks large institutions, hedge funds, smart monies, dark pools, tracks institutional investing, right? And what happens is, as institutions are getting into positions, they can't just drop millions of dollars into an order, because what it would do is it would eat up all of the initial liquidity, but create a price bump, and other investors would start to get into that position. And as soon as I realized that there's no liquidity left, right, the price would actually drop below smart money's initial investment, and they would be into a negative position, right? All of that can happen in seconds or microseconds because of the way that the order flow goes. So in order for them to get into a position, they have to scale in and scale out. As price is coming down, and smart money believes in the position in the longer term, they'll start scaling into it so that when it finally hits a support level and they're ready for it to turnaround and for them to start taking profits. What they'll do is they'll speed up the initial buy orders a little bit just to create a little pop to get interest coming into that stock. And once people see that it's starting to move off of support, people start buying into it. And what's happening on the other end of that is smart money is selling them their shares so they can get out of their position. So looking at Lululemon, we had bullish divergence that occurred approximately back on the 10th, right? And this is how you can see that. You can see that smart money had been buying into this position, and approximately on the 10th, Lulu had started its downturn. So we had divergence at least to about 324, 325. I'm just doing these really roughly. There's little areas of micro divergence that had played out, such as here, right? You know, the divergence that occurred here had played out, which would be the new divergence area would have been here, right? And so what had happened is they came down, they found the support level, they started buying, started entering some buy orders, and Lululemon started diverging back up to the initial, or reverting back up to the initial divergence point as price action is selling out of those positions, as you can see here. So the flow index is coming down, price action is coming up back to the original divergence point. If we'd taken an entry here at the low, 292, we would have had a nice 292 to 317. Nice $20 move there, and $25 move. Knowing that when that divergence starts coming down, they're going to start getting into it. So Lululemon definitely had some bullish divergence at the end of the week. We probably got we got into some pretty decent positions. So this is, I'm just going to use this really basic chart. I just want to show the trades, right? Here we go. There's the trades. Knowing that smart money was getting back into it, the flow index was leading our way. $31 move, right? Just in that single day. Another opportunity, probably a little bit safer of an opportunity to get in, would have been the pullback on Friday for the little move, a $13 move or 4.25%. Lululemon, definitely a win. You could have got 10% off of the move on Thursday, another 4.5% off the move on Friday, for a total of about $43, right? Pretty decent move on Lulu. All right, let's see. I don't know if I want to show you a bunch of other charts. I think it just makes sense to just stick with the ones that we got. Okay. Next up on our list was Dick's Sporting Goods. Dick's was a little bit trickier, right? It was way more clearly defined. Smart money had been buying into this into the stock for quite a while. We had some initial divergence that had occurred back on February 18th at approximately the 104 level. As you can see from our last example, right, price action is coming down, a little double bottom. Flow index is rising. At that double bottom, smart money starts getting out of their positions. That divergence up to about 104. I don't think it's completely played out yet. There's only about $1 left in it. But the move from 95 to 103, pretty sweet looking move there. We could have also played the downside of this. If we know that flow index is buying into it and price is selling off, we know that there's going to be a divergence back to it at some point. So we could have potentially sold into this and caught a downside and an upside play. Looking at Dick's on the chart. Okay. Very bearish going into the week. Right? Our week starts here. We had a short week last week. Very bearish going into the week. Actually bullish on Friday, right? Towards the end of the day on Friday. If we followed our trading rules, right, nothing below the 50. Knowing that smart money was starting to buy into it, though, we would have gotten into it off of this bounce here. Taken the initial day trade of $10. Waited to see how it happened in the morning. Realized that it was holding the 50-day, and we had smart money getting, the divergence was playing out. So another opportunity here for $7.10 estimated. So 7.4% on Friday, 11.27% on Thursday. Total of about $18. Definitely a winner chicken dinner on Dick's Sporting Goods. Okay, next up on our list was Team. Team was definitely a little bit trickier, right? It wasn't as clearly defined, but there was definitely some bullish divergence in it that had started occurring at least. I mean, they've been buying into this position since the 7th, right? So money's been flowing back into it. We've got that initial bullish divergence that occurred at approximately 311. Price action came down, hovered around this regular block trade level at 301.60, fell back down, found some support. This is pretty much the market doing what the market needed to do. Found some support at 281 and started to retrace. That's about the time that smart money got out of their positions. Definitely a move from regular block trade to regular block trade. Very clean, easy move going into the next couple of weeks. Possible inverted head and shoulders on team. There's a little bit of divergence left to play out, approximately to about 314, 310, 314. So maybe another $10 move if you're interested in looking at that one as well. As far as team's concerned, couldn't hold the 50, right? Can definitely play the downside move if price action is not respecting the 50-day in a downtrending stock. Opportunity to the downside, buy some puts, okay? I'm just looking at the call side right now. I'd have to go back and look at the trade review. Thursday was a big day for everything. $35 move there. $35 move. That's right, I said it. If we would have been a little bit more patient into Friday, even if we just caught this, the very, very strict rule of trading just above the 200 SMA, there's an $8 move you could have caught. We did have a 50-200 crossover, so going into next week, we've got that bullish momentum to continue us on to where that divergence initially occurred back here at like 318, 320. Had a 50-200 day crossover, right? Just doing price action and these two simple moving averages, I think there's another opportunity to go to about 319, 320. Take profit at 310. So total $42, let's call it $43 move on team. Winner, winner, chicken dinner. All right, so that's 3 for 3. Excuse me, it's starting to catch a little bit of a tickle. All right, looking at MTCH, this one I wasn't super thrilled about. If there was one that I was a little leery on, it was definitely this. But knowing that smart money had been getting into this position since about the 9th, even through all of this chop, we had some divergence that occurred back here at 116. So smart money started getting out of this position a little earlier. And so we playing the downside move from regular block trade to support, knowing that there was divergence at least to this level and possibly this level here, right? So we know that price is coming down, flow index is buying into this pulling back. Realized that smart money got out of their position, started getting out of their positions, which would cause price to increase, catch the bottom, make the move up on Thursday, big drop on Friday, another opportunity to catch a little rally based on how the overall market was doing. So move to the downside and 2 moves to the upside on MTCH. Let's see how that looks on a chart. Okay, going into the week, knowing that we were bearish sentiment across the market, downside move, couldn't take the 50, catch a downside move for about $7.50. Felt the reverse SAR that smart money was buying into the position, or smart money was starting to create that divergence playing out, even if we got a bad entry. Great day on Thursday, $12.50. Pulled back. If we played the very most strictest of our rules, where we don't trade anything below the 200 on the 15, still would have got a $5 move off of it. Very similar setup to team in that we had a 50-200 crossover on the 15-minute with a little bit of divergence left to play out, right? You could play possibly 115, 118, or any pullback. If it holds this 50 on Monday, right? If it holds the 50, the 110, you could go 110 to 117. Regardless, we had $16 on the way up, $7.50 on the way down, for a cool $23, and let's just call it $24 total move. So winner, winner, chicken dinner. 444, we did it again. Yes. We've been calling these pretty well off. There was a freebie play that was Shopify. If you knew anything, Shopify had a massive move on Friday, right? I'm not going to get into Shopify too much other than show the flow index at this point. I'm really, really analyzing it because this pullback, right, is part of it is in line and part of it's not. So I'm gonna have to keep a little bit closer eye on the shop algorithm. They've been scaling into this position for quite a while now, right? Just make sure. All right, and they've been getting into this position even through the drop. Double bottom, rounded bottom, nothing really like an inverted head and shoulders. There's no clear like, oh, everybody recognizes this pattern. Potential cup and handle forming. That's one. There's some divergences that still need to play out. So I would say anything below 675 is played out. The flow index starting to make higher lows and higher highs, may pull price action up with it a little bit. There's a trading zone that runs about 680 to 700, and then this zone right here, 701 or 700 to 715. Chop around there for a little bit, and then maybe retake this one. Looking at shop. Nope. Come on, shop. Do you see what I see? Yeah, I see it as well. So look, we got a great move on Wednesday. I didn't trade shop. Great move on Wednesday. If you had caught in this move, that was a $100 move. All right, big move. Rallied up, pulled back, held the 200. So now we have a 50-200 crossover, right? Rallied up, pulled back. It's riding that 50-day. W-shaped reversal going into next week. 700 psychological level. So I like this going into the next week. But, I mean, that's just a massive move. If you had held on to it, right, you would have $112 or 20% move on shop. Yeah, just calling bangers. So that's it, man. Thanks for joining me. I'll be working on this week's watch list today and tomorrow. We've got some good ones. Shop is on that list, by the way. So thanks for joining me. Once again, I'm Darkpole Algo. If you haven't signed up for the weekly watch list newsletter yet, head over to darkpolecharts.com. Go ahead and sign up. It's a free newsletter. Come on. We put out a lot of stuff on Twitter, but we do a deeper dive, both written technical analysis and this video that we put out every week that is published on Sunday night. So you have plenty of time to review this, mark up your chart how you'd like, screenshot the flow index divergence. I mean, it's free money. Money, 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 money. But thanks for joining me. Like button on the way out the door, please. Make sure you click that. Click the subscribe and go ahead and turn on the little bell notifications. That way you get notified anytime we put out a new video about how to trade the stock market or how to cheat the stock market for $100 a day. Those are some of my favorite titles. Stay safe, stay green, and enjoy your weekend. We'll see you all on the Monday.